Hey guys, and welcome back to Smart Money Minds. My name is Ben, and this is the channel where you learn to be a consistent, profitable trader in any market conditions. And if you haven't done so already, make sure you hit that like button, subscribe to my channel for more of these videos, and without further ado, we're going to get into the market crash. What now? So we got a lot of tech stocks dropping from all-time highs, and they're dropping and they're losing 50 to 70% of their value. For example, we're looking at Shop here. Shop is down now 63%. Affirm 78% drop from all-time highs since November. We got PayPal, which has dropped 67%. So looking at all these charts is quite depressing. If you look at it, look at this. Affirm is actually at new all-time lows, and PayPal has given back so much of its gains. So I'm getting a lot of questions asked to me saying, why is this happening? Is this going to go any lower? And a lot of people are in pain and they're losing a lot of money because they bought too high. And they are also asking, what should we buy now and when should we buy? So in this video, I'm going to dissect quickly about all these questions and give you a quick answer and my opinion on what's going to happen and how I'm going to play the market coming up. So the first question to answer is the why. So the first thing is COVID is quote-unquote ending. A lot of countries are going back to normal. They're removing a lot of mandates, and so a lot of work from home stocks like Zoom or Peloton are just not as profitable because people are going back to work. Things are just going back to normal, and they're not making money like they used to. The next thing we have is also a very high inflation rate because the governments have been printing so much money to make up for all those people that were stuck at home that could not work. We have an inflation rate in the United States of 7.5%, and that's usually between 1 to 2% in the States on an average normal year, and 2 to 3% in Canada. If you take a look here, in the last 10 years since 2012, our average rate, or our average inflation rate, is only 1 to 2%. And look at this, it's up to 7%. And this is the average inflation as well, 7.5%. So it's gone up exponentially 2 to 3 times more than what it has ever been. Canada is not doing that much better. Since 20 years ago, we haven't hit this high of an inflation rate, near 5% here. So to combat this crazy inflation rate and all the money printing that the government has been doing, the Federal Reserve, actually has to increase interest rates. So they're looking to increase it 4 to 5 times this year, and also in 2023 they're going to look to increase it 2 or 3 more times. Why does increasing interest rate help combat inflation? The way they do it is, if the interest rate is increased, it becomes harder for people to borrow money, let's say for a business or for a house or for any big expense. And so when that happens, less money is circulating around the economy, and so less money is being passed off to different people, and so the economy slows down, and that drops inflation rates. And so by doing that, when the money slows down, companies have a harder time trying to get more money for their new projects and for their expansions, and therefore stock prices will start to decrease as well. And lastly, we have a lot of instability in the world. So we have China and Taiwan always wanting to fight each other. There's a lot of animosity against China with the world. And we also have a huge Russia-Ukraine crisis that we may go to World War III. And that's a huge instability that could crash the stock market. So the next question is it going to go any lower? And my answer is yes, it's very possible, because we have to follow the trends on the chart, and there's no sign of relief yet. You look at stocks like Facebook, which had poor earnings reaction, and it's just continuing to go down, and it closed basically at the low of the week. Now you look at PayPal. for example, you have something, once again, closing at the low of the week, and the trend, you see this 8 EMA here, has not been able to break over this this resistance line, basically. And as of this point, any bounce is really just a lower high unless it confirms otherwise. Now, what should we buy or be interested in? The stock market is inverse with a lot of other industries. So if tech stocks go up, if other stocks go up, different stocks will go down. So for example, if the stock market is going down, then the bond market and tangible metals and resources will go up, because when people have less confidence in growth market, such as the tech stock industry, then everybody wants to buy stuff like gold, oil, things that they can hold on to and has actual value. For the S&P 500, the 3 times ETF bullish is called the SPXL. However, the inverse of this, the bearish, is called XPXS. So therefore, you see how when the S&P 500 goes down, the XPXL continues to go up. And this is how we can play the market bearish if you don't want to short the market and borrow shares. You can just buy into an ETF that tracks the market inversely. Now, the last way to really play this market is just to play your regular tech stocks and just buy the dip, but you have to set yourself a very tight stop loss with very good risk to reward. And you can't expect to be successful every time as well, because the trend is continuing downwards and you're fighting against the flow of the river, so to speak. And the last question is, when do we buy? And as successful traders, we need to buy when the trend confirms again. So we need to look for the higher low and the higher high. And don't just blindly buy the dip, because it could continue to keep going lower and lower and lower, and you're going to run out of money before you can get to the lowest dip and before it climbs. And it's how much red you can live with and seeing your account keep going lower and lower and not flipping out and being scared that you're going to lose all this money. Another way to buy is to use indicators and support zones and technical analysis to find areas of confluence. For example, what I have on watch, for example, is PayPal. So PayPal has given us a weekly bear flag, hit the 8 EMA here in this blue line, and continue to push back down. But what I am seeing is that there is a support zone around this $92 to $102 range. So this is where I've drew my little square here, a little line, where I'm looking for a flush, maybe of 100, and then that's where I start my position. So I may buy a really small position, and just to see if we start getting a reversal. And if we get a reversal, then great. I can take some profit, I can be in the green, up a few percent, and set my stop at break even. And if it keeps going back up, and we set something up like this, where we set a higher low and higher high, then I can buy a little bit more and get back into this uptrend. And lastly, we really want to see a flip in volume. So let's go back to PayPal here. So PayPal, I really like this, where it shows me where on TradingView here, how much is bullish volume, which is green volume, and how much is red volume, which is bearish volume. So for the last 3 weeks, look at the amount of bearish volume that's come in, and the bulls are buying very, very little. So what I want to see is something more like this, where when this uptrend is continuing, we want to see increasing bull volume. You want to see bull volume that is maximizing, really, really strong here. Until this volume here starts to subside, there's no interest really for me to buy anything, because I see that the bulls are not interested in buying up any of this stock right now. I know a lot of people are hurting from this market drop, and people are calling it a market crash, but In the comments below, I want to hear what your thoughts are about this market crash, and if you're holding on to any stock right now, and what's your strategy in playing a market that's really red right now. Let me know in the comments below, and if you enjoy more of these videos, make sure you hit that like button, subscribe to my channel, and we'll see you guys next time.